Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm in the Thinkorswim platform and I'm going to be scanning the S&P 500, so let me switch over to that and then click scan. And then, as always, I have an implied volatility column here, starting with the highest implied volatility and then going down. So if we see here, we have Enphase with the highest volatility currently, and this is after hours data, so it may change when the market opens. But here we have Enphase. Looks like it has earnings coming up on February 6th, currently trading at $106.66 with an implied volatility of almost 80%. Let's go ahead and see what kind of premiums it's currently paying out based on that volatility. Jumping over to the trade tab and switching to Enphase. Here we can see the options chain, and I'm going to be looking at the 8 days out, so expiring next Friday. And let's go ahead and start with cash secured puts. What I usually like to do is look for what cash secured put is going to pay about 1%. In order to do this quickly, I have this custom column added to my Thinkorswim platform called percent premium that quickly calculates the percentage profit for selling premium at a certain strike price. It also shows you an estimate on the covered call side as well. If you're interested in adding this column to your own Thinkorswim platform, check out the link in the description for instructions on how to download it and add it to your platform. Now jumping back to the cash secured put, in order to get about 1%, we would need to sell the $99 strike price put option, which would collect us about $92 to $95 in 8 days, or almost 1%. The risk here is if the stock did end up closing below $99, or if you got assigned, you would need 99, the strike price, times 100 shares per option in order to purchase the shares. So in this case, you would need $9,900 in order to purchase the 100 shares, which in some sense is the risk if you did get assigned. On the covered call side, you would need $10,666 currently to buy 100 shares, but then you could go ahead and sell the $107 call option for about 3.2% in 8 days, which is quite high. That would be about $335 to $345 in premium. Jumping back to the scan tab, we can look at a couple more. Looking at one that's slightly cheaper in price, we have Warner Brothers, currently trading at $10.28 with a volatility of 62.73%. Jumping back to the trade tab, we can look again at the 8 days out options. On the cash secured put side, it looks like you could sell the 9.5 strike price for about 0.7% profit. A lot of these numbers seem to be a little bit skewed right now or off, maybe because this is aftermarket data. But let's go ahead and continue with this one. If you sold this, you could collect about $4. And the risk here would be if you did get assigned, you would need $950 to buy 100 shares. On the covered call side, you could buy 100 shares right now for $1,028, and then you could sell the 1050 strike price for about 1.76% or about $18 in premium per contract. Jumping back to the scan tab, feel free to pause the video and take a look at the full list of highest implied volatility stocks in the S&P 500. Let's go ahead and look at Advanced Micro Devices, or AMD. They've been in the news a lot this week and seem to have been climbing quite a bit. And if we want to check what's happening with them, we can click here. Earnings coming up on the 30th, which is pretty soon. Looks like they're trading at $162.67 currently and have an implied volatility of about 53%. Jumping to the trade tab now. Again, looking at the 8 days out options. In order to get about 1%, you would need to trade the 155 strike price put option to get about 0.81% in this case. You would be able to collect $124 for selling this option. But the risk here, if you did end up getting assigned, you would need $15,500 in order to buy the 100 shares. On the covered call side, it would currently cost you $16,267 to buy 100 shares, but then you could sell the 165 strike price call option and make about 1.92% in 8 days, which is about $315 in premium. Jumping back to the scan tab, here we have the full list. A lot of stocks seem like they have earnings coming up soon or by the end of the month. That can all be checked by clicking on these notifications. Feel free to pause the video and look through the whole list of highest implied volatility stocks in the S&P 500. And if you have any questions or comments or want to see my analysis on any of these stocks or options, feel free to leave those questions down below. And it really helps to support the channel if you like and subscribe. And I'll see you all in the next one.